Okay, I think we should start. I would like to welcome you to today's SIFTA webinar on the topic partnership between microfinance and fintech. And Francesca, can you go to the next slide? I would like to, as always, I would like to share a few things about our sponsor and some house rules. So we planned today's session for around about 90 minutes plus question and answers. I would like to invite you to share your questions in the chat box. Towards the end, we will have a Q&A, and if you would like to ask a question directly to our speaker today, you're more than invited to stay, and then we can discuss topics one-on-one or in smaller groups. Today's session will be recorded, and the slides will be shared afterwards, after the end of the webinar. Next one. Allow me to briefly introduce Wolfgang Spies-Knafel, if you don't know him. Wolfgang works at the European Center for Social Finance, which is based in Munich. And he has written a very interesting book about artificial intelligence, blockchain for social impact. And I will give Wolfgang some time to add a little bit more info about yourself. I think you can introduce yourself better than I will ever be able to. I would like to share some information about what SIFTA is. Basically, it is a support instrument which has been set up under the InvestEU program. And our sector, microfinance and social finance, has its own window. And in this window, within the SIFTA framework, organizations can apply for technical assistance, tailored trainings. As a consortium, we organize different learning formats from workshops, webinars, and other events around microfinance and social finance. Next slide. So EIB is in charge of managing the SIFTA initiative. And as I said, it provides targeted capacity building, project advisory, market development services to financial intermediaries active in the microfinance or social entrepreneurship space. Basically, it is a continuation and an enhancement of the EU Program for Employment and Social Innovation, short EASY, technical assistance. Next slide. So eligible organizations have to be based in the EU 27 states. The initial budget is available until December 2024. Beneficiaries, as I said earlier, are microfinance providers such as banks and non-bank microfinance institutions, and also social enterprise finance providers such as investment funds, impact investors, incubators, accelerators that offer or are in the process of widening their scope with a view to providing financial support to social enterprises. The organizations who operate the program are led by Frankfurt School of Finance and Management, based in Frankfurt. And Frankfurt School is the consortium leader. And in addition, the Microfinance Center in Poland and the European Microfinance Network, based in Belgium, are the consortium partners. Ratings, assessments, and evaluation services are provided by MFR Rating, and they have a focus on institutional assessments. If you are interested in SIFTA and want to learn more about what SIFTA can do for you, of course, you can directly get in touch with us at EMN, or you send an email to sifta@eib.org, and there you have to complete a request for service template, which will be sent to you after you applied informally for services. With that introduction, I would like to hand over to Wolfgang.
Yeah, thank you, Jörg. Thank you for the introduction. Good to see you. Good to see you all. Let me quickly share my screen. So let me quickly go through the agenda. And we have 60 slides for today. So we can talk for like 5 hours, but we try to keep it like for the next 60 minutes. So that we also have a Q&A, some time for discussions, and also time for some interactive elements here. So Jörg already said today is the first session, and then we have another one next week on December 14. So today is we cover the like what is the definition of financial technology, fintech, what are lending processes, what are examples for fintechs, what are the current issues with the interest rates, what are we seeing in terms of impact analysis, and also some challenges and biases around data and how data is used for evaluation of credit scores. And next week we cover more the blockchain and crypto models. So talking about verifiability, accountability. Also we'll be talking about the central bank digital currencies which are coming, and also talking about business models and any follow-ups and open questions which we had from today. As already mentioned, please jump in if you have any questions or any comments, or put them in the chat. If you have anything what you find interesting and want us to share with the group, just send it to me, and then we can share it with the group. And Francesca from EMN will also share the materials in the afternoon, so you can just download it from the website. Just quickly to myself. So I have a background in engineering. So in the like more on the technology side, then went into investment banking, so more the finance side. Then back to academia, working on social finance, understanding how you can apply finance to social issues, or how can you finance social innovations. And for a few years now, I'm the co-director of the European Center for Social Finance at the Munich Business School. We were involved in the previous technical assistance program, and we are also working on a number of digital concepts for like how can you improve what is happening in this field. And on the right side, you see the book, the Artificial Intelligence and Blockchain for Social Impact. Let me start with what is fintech or financial technology. And this is not a textbook definition, but this is what I see, what is the promise of the field. And then usually you see fintech as the umbrella concept of what you can achieve with technology to improve financial processes. The first one is the reduction of transaction costs. So there's some examples where institutions are able to reduce the transaction cost to a few cents because everything is automatic. Then you have automatic processes. You have everything, no human in the loop. You have zero marginal costs, so it's quite attractive from the business side. We can also discuss about like what does it mean if you have no humans in the loop, and then Raphael can talk about the Crescent example, like how much can you really automate in the process. And I think there are limits. If you want to go, if you want to achieve more impact this year, with your funding, and I think that's always like one of the. I'm not. I would say I'm positive about technologies, but I always see like the challenges, and then we have quite a few of those afterwards, where you need to see like what is the trade-off, what are the costs of implementing technologies. The second one is faster decisions, so that you really are able to reduce the time to close transactions. Better decisions. So I would say better decisions, as good as you can, get them. So meaning that you have new scoring models, you have more use of use more data, and I will show you a few examples afterwards, like how much data fintechs are really using, and how much these data are also like penalizing customers. So it's also something what we need to see, like how many biases are you keeping in the process. Something what is quite obvious, like a better user experience, and people often talk about the low net promoter scores, so that people are not very happy with the banking services. And I think there are many options how you can improve the services. And the last point here is that you can unbundle services. So it's something what you see is in the banking industry, you had like everything under one roof, and then people start to say, well, we do only payments, we do only scoring, we do only the software part, we do only KWs, as know your customer regulations. So you see like an unbundling of the services. What are some open topics? What we see in this field is you really have, and it's quite surprising when you think about it, you have like a time lag. So for example, the enterprises we are funding, they're having an impact, and when you want to measure the impact they are creating, it usually takes like 9 to 18 months until you get the impact data. And there are surely ways how you can have more real-time data in how you can measure what is happening. And the delays are driven by, so you send them a survey, the survey takes like 3 months to finish, then you do it only after like once a year, then you need like 2 months to analyze the data, write up the reports. So, and that's really a long delay here. The other thing what I really find an issue here is that you need to trust the organizations, and as and I think the organizations you're working with, they are highly trustworthy, but still there's no way that you can independently verify any kind of impact data. So for example, I was working with a renewable energy company, and then if you say like where the solar panels installed, you need to trust them, and yes, I did, but still it's like interesting that there's no way that you can go on Google Maps and say, well, on this house and this house there are those solar panels installed, and there's no and I think it's perfectly feasible to do that. We also, for example, at the center, we're also working at prediction models where you try to use neural networks to predict impact data. So where you say like what are the impact. So for example, you try to predict, I don't know, some kind of who needs more more support, and then you can see like what are the data which can predict like which young persons or unemployed person or disadvantaged population needs more support, and then you can try to model this. You shouldn't put your funding into this. Just rely exclusively on this, but I think it's a good additional measure. What I'm also missing is something what you see in the carbon credit markets. So where you see, well, I want to buy. I put here like 2 examples. I want to buy 200 nights of shelters for homeless people, or I want to support job placements for 500 students. And there's no market platform where you could use these kind of services. And the last point here is that you cannot really use I don't know, satellite or other alternative data which we have, which could be available. Let me know if you have any questions or comments, or what you think is missing from your side here. Okay, let's move on to the next one. And so, for example, this is something what we are seeing now. This is from JP Morgan report, where they are like what are the steps for sustainability-linked bonds. And in this process, you have a lot of third-party organizations which are checking if the funds are really placed as they should. But it's really, but I think you could really improve the processes, make it cheaper, and have much more open source and verifiable data. And the same with biodiversity. So why should I, as an individual, not be allowed to check for myself how biodiversity in Uruguay is improved or not? So I think those are many things which are still missing, and which could be worthwhile to consider. And people are working on these issues. It just takes a while to get there. Or for example, if you say, let's look at SDG data, and we have all the SDG data, but we just need to have like the pipelines, the data pipelines, the data flows between the different organizations and the different, so that you keep and Dirk also knows this quite well. Like if you want to do your benchmark analysis, you look at Eurostat, and then Eurostat, the data is like quickly outdated. So and then you never go back and update the data because the analysis is done. It's just like too much manual work. And then if you use databases, you have all the data always up to date. Something what we will also discuss more in more detail is what you can do with blockchain solutions. And when people talk about blockchain, they always say there's no use cases, which I often understand. But if you look, for example, at something like war crimes, you can use the blockchain technology to store a fingerprint of the information, and then you can use the images for court cases afterwards. So you can say like what happened, and then every court and every justice system will accept these pictures as a proof of what happened at the current time. So this is quite a powerful technology, and the same applies for what we are seeing in microfinance as well. So like if money is used for certain purposes, you can always say you can always store a fingerprint of or a proof of the system of the event, and then you can then you have some kind of independent verifiability or for others as well. Okay, let's move on. If we go to another topic, also like a blockchain related topic, it's something where you can see that you implement automatic transactions. So that means if you say, well, I work with the homeless population, and every time one of my social organizations delivers a service to the homeless community, I pay them a certain amount, which is predefined. So every time they deliver the services, they are just paid according to this protocol. So in this protocol, you have funding here. So there's the market platform, and when the social organization validates when they validate the services, they can trigger the payment, and the protocol triggers the payment to the social organization, which is quite powerful if you think about it. So that you say, I only pay whenever a certain impact is achieved, and which is quite easy to implement. So it's just like a couple of lines of codes, and then you can set these systems up. And what is also quite nice about it is and we will cover it next week in more detail, is that you can structure any market, any data flow between institutions, and structure it according to your preferences. And we are coming quite soon to the cases, but just wanted to talk about the industry level first. If we can think about like what are the flows between the data flows between the different organizations, this is how it should look like. So you have some kind of data platform. Here, the data platform is receiving the survey data from the final beneficiaries. So like the third-party audit of the impact data, and it's quite so if you use some kind of standard service, it's not too expensive. And you have the impact data from your organizations, so from your lenders, for example, and then you can combine the survey data with the benchmark data or the baseline data from your organizations, and can create your own data platform where you use all kind of other statistical data to supplement what you are having. And then you can give real-time access to your funding organizations, or to whoever wants to have this data and report it to the organizations. And the reality today is, and I guess you know it as well, is that the portfolio organizations are collecting the data, and like once a year they send the annual report to the funding organizations, which is surely something what we can improve. Any questions so far? Or all good? Perfect. Let us now move to the fintech industry. And I'm also a partner in a venture capital fund working on impact and fintechs. And what we are seeing nowadays is really quite interesting. So, I mean, that's also something of your daily business. So in the old days, you had like low interest rates, so you had like cheap money. And now fintechs are also facing much higher interest rates. And I know a few cases where they had to go back to their business and really go into some kind of crisis mode, because the assets they are funding, because the higher interest rates are not really put their business model in danger, because they couldn't afford to pay their costs anymore, because the willingness from the clients was not that high to pay the much higher interest rates than before. Another thing is here that the banks are nowadays much more focused on, also more profitable. So they're also taking on the new technology technologies themselves, so using as much as possible. The third point is again the more challenging access to capital, so that we know that we have now more difficulties in getting funding. And I'll show you in the next slide how the funding has increased in Europe. The technology is also more proven. So the same with, for example, what we see with the blockchain technology, it's now totally accepted as a very secure way to secure your data in a decentralized and distributed way. And also that all the new business models are quite well documented. And we also have much higher scrutiny from the regulatory authorities. If you look at the funding levels, so we see it here. We had like a peak in 21, 22, and now we have much lower levels than before. Also driven by the fact that the interest rates are much higher and that fintechs, the business model of the fintechs are much less interesting than before. Or the willingness to invest in these businesses is lower than before. And also, if we look at what are the where's the money going, and there's also maybe something interesting for you, like what are interesting partners. So, like most funding is going into consumer credit and pay now, buy now, pay later, where you, for example, all this consumer credit offers at not supermarkets but electronic stores and so on, where they offer to pay you, where you can buy it now but pay over 2 years. The next one, crypto and digital assets, wealth management, asset management, and also quite large is the private finance management. So something where you can, or the personal finance management, where you can say like, how do you manage your assets? How do you manage your insurances? How do you manage your saving plans, and so on and so forth. And also something what is also quite interesting for us here is the large investments into the ESG data sector. Like, what is the data we are looking at? We are using to analyze the ESG impact of companies. If we look at the different sectors, we have the lending cluster, where you are basically providing loans and credit facilities, and they're often using innovative scoring models. And I'll show you in a minute, like what kind of data they are using. We also have the personal finance wealth management. So mostly what we understand is financial literacy, digital banking, of course, insurance. Fintechs and insurance are mostly focused on very niche concepts. So I don't know, but like for your dog insurance, very specific travel insurances, where you just offer like very specific insurance options for your stay. Quite large is the whole payment sector, where you offer easier and cheaper money transfers. And if you ever look at how expensive it is to transfer your money to, I don't know, to any country outside of the European Union, it's just crazy how expensive it is, and how much you could really can really reduce the costs here. There are also examples where you, so for example, if you need to leave your country as a refugee, there are also ways that for digital storages of money, where you can store your assets in some kind of digital wallets, so that you can, that there's no real risk of losing your assets while you are leaving your country. crypto models, everything related to cryptocurrencies, smart contracts, transfer of funds, and so on. We've seen a lot of like nonsense business models in this area, or a lot of like fraud where people are trying to how to say it, like steal money from other people or just defraud them, which was usually a shame. But I think it's really getting better, and financial supervisors are also taking a closer look at what is happening in this industry. I've seen one of you is a KWC expert, so that you so whenever you sign up a new client, you need to know like who is it, are there some kind of money laundering regulations you need to take, how do you manage this, how do you manage the sanctions, so there are many aspects here where you need to document your your activities. Then investments and savings, like are those areas where you and in our area I would say it's mostly about how can you invest ESG, aligned with ESG criteria you find relevant for yourself. So not only excluding tobacco and gambling and weapons, but also like how can you go into, I don't know, like microfinance loans, how can you go into impact investments, those kind of area, and of course the hosting of data analytics. And the interesting thing is that there are some people who are saying that every company is a fintech company or a financial technology company in the future. And I think the AquaConnect is a good example here. It's an Indian company, but I think the business case is quite similar to what we are seeing here. And what they are doing is they use satellite data and sensor data to improve the quality of the fish ponds. So they're Indian farmers who have aquacultures, and they are for fish and for shrimps. And what they do is they give them advice on how they can improve the quality of the water of the aquaculture. And over the years, they have like very good data on the quality of the aquaculture, and they know how good they are working. And they also know like what is the yield, how much are they earning. And given this data, the next step what they did is they were also offering them credit. So you are advising a company on on your activities, and then you know quite well how good they are performing. And the next step, they gave out credit to these companies, which is a perfectly fine business. Then again, is like you're giving up some kind of information asymmetry, because those who are not that good but would need more credit don't get it, because the company knows much better than you how much you are earning in the future. So I think that's something like a typical business model or playbook, from a playbook what you're seeing here. So getting data, understanding your clients, and once you understand your clients, you offer them a product, like some kind of financial product. And we see many cases where you say, like, how can you, for example, all those e-commerce providers where you say, give me access to your e-commerce flows, and then based on your activities, I can give you credit for your company. Another company is something else. What we are seeing is that there are some there's a company which is active in Chile and in Mexico. And Action Venture Lab invested in 2017. And what they do is that in Chile they don't have any kind of, already do, but there's a lack of formal credit bureaus. And what they do is they offer individuals with no access to credit, they offer them to build the alternative credit score. And what they do is they take the utility payment transactions, so how much you pay for water, electricity, and other costs, and say this is a proxy for payment behavior. So if you are always paying your utility bills, we can assume that you are also willing to that you're also able to pay your other bills. So until you have this general with your highlight me score, where you can, which is a way to improve your access to credit, which I think is quite valuable. If you look again at the assets, it's if you are fintech in the lending business, and the others don't have that many assets because it's not their business. You have like 3 different categories. The first thing is those who are like below 1 year. So I don't know, like claims against companies, those payday loans with just a week or two of credit. Or even if you think about those from the circular economy. So if you want a company, if you want a business and say, I buy books from consumers and I sell them as a used book afterwards. So basically you're fintech. So you have your books as your assets, and then you sell it over time, and then you also need to fund these books with loans and bonds. And then the higher interest rates is also like hurting your business, because then you need to pay much more to cover the cost and take your credit. Some have like a medium duration, I don't know, some kind of consumer loans where you have like durations of 1 or 2 years. And then let me show you an example on the next slide. The student loans, for example. So if you are saying, well, my business is the lending, is giving loans to students and those who need it most, and then you say, I don't know, in this case it's a German company, you do some kind of income share agreements. So you have like 13 years of outstanding of a loan duration, which is quite which can be quite tricky to finance. So if you say I need to fund my investments over the next 15 years, I'm not sure if there are many who are able to do that. And especially if the interest rates are higher than now. So in this case, they have like they also have a cap of the repayments, which depends on the social orientation of the provider. Some have it quite high, some have a lower limit, but depends. Also, something what we are seeing here is when you look at the number of startups in the fintech area, they're much more than before. It's also driven by the fact that it's quite cheap to set up your own software business or software as a service business, which very high uptime. And this is like from Andreessen Horowitz, where he said like 10 years ago you had to invest like at least 100,000 euros, and it took months to deploy and set up your servers. And now it's like 100 euros and 1 day to deploy, which is also true, because in our case, so when we run these services, so this what we are doing here is we pay like 270 euros per month, and then you have like, it's always available. You have like very high quality standards, and you just pay for the amount of server time you need to run your services, which also lowers the cost to get into this field. However, what I've learned in the past is it's not that easy because there's a lot of there are a lot of systems you need to connect. So if you get if you need to set up your models, you need to build up like some kind of data infrastructure where you need data pipelines, where you need to have I don't know, some kind of database or data warehouse. You also need to connect it with other systems. You need to understand. You need to set up your data models. You need to have some kind of actions you take based on the models, and you also need it to embed with your output. So you have your input data. You need to connect your input data to your database. You need to connect your database with something what you are seeing as your output, and then you have all kind of governance and security issues in between, and this is driving up the costs for running these services. So often you look at a IT business and then you say, or fintech, and you say like, what could possibly be so expensive? And expensive is the number of systems you need to connect and the number of interfaces with other companies, how you get your data, how you model it, how what are the service level agreements you have with your clients, and then especially if you work with banks, they expect that you are never out of business or are always available, and this also drives up your costs. If you have any comments, just let me know. So let's go into the next topic, credit scoring. So how does it work with the credit scoring, and what kind of data are others using to calculate the score? Banking used to be a relationship business. So in the past, and then I don't know, like 100 years ago, or even 60, 70 years ago, there were like the 3, 4, or 5 C's. So the first one is the character of the person. Do you know the person or the family? The capital, how much are they asking for? The collateral, the capacity, and the conditions. And that's something what people refer to as like the people business of banking. Which was good for many, but not that good for others, because if you have no relationships, if you're not well known in your community, and then if you're, I don't know, if you're not a member of the local church and the bank manager is going there, it was not good for you because it reduced the chances of you getting a loan. And what happened is that banks started to use credit scoring models, and it's quite simple, because you have all kind of data on those who are taking a loan, and then you have only one outcome, the repayment of the loan. And then you know, like, what is the age, what is the income, what is the business, what is the collateral, and then you can say what is the repayment probability, what is the probability of repayment for those lenders, and then you can just quickly calculate that because you have the models. And for banks or for microfinance institutions, the same. You need to have you have 5 scenarios. So the first thing is you want to accept those who are good lenders, and you also want to reject those who you think are not going to repay the loan. And what you don't want to do is you don't want to give loans to those who are not able to repay the loan, or you want to reject those who are perfectly fine, who would be repaying the loans, but you're not giving them the credit you're asking for. So those are like the outcomes, and here the ones where you see, well, give you the loan, but where the client doesn't accept it because it's too expensive or the terms are not good enough. And from a historical view, we've seen it in the 1960s. Credit card issuers started doing credit scoring. And organizations soon realized that it's like very beneficial for the default rates, because they were able to really lower the default rates. And what we're seeing now is that most are using some kind of logistic regression models, where you say you use all kind of data, and then you predict which of your clients are going to repay the loans and which are not going to repay the loan. And this is important because the logistic regression models are those where you are perfectly able to predict, or to say, like, what is the why are we not giving a loan to a certain individual? And this is also something what the American just founded today. The Consumer Financial Protection Bureau was issuing as a guidance, is that as a financial institution, you should always be able to say, like, why didn't you give a loan to a certain individual? So I think that's quite important to keep here. It's like you need to explain why you're not able to give a loan to a certain individual. And let me jump here a second. So, for example, if you look here at neural networks, and let's imagine it this with millions of parameters, you're not able to really predict, like, what was the reason that the certain person wasn't able to get it. However, there are many institutions which use machine learning to predict it. And let me just show you a couple of examples here, which I find personally a bit worrying, like what kind of data people are using. So, for example, if you look here, so Admiral Insurance Group. So if you happen to have a Hotmail email address, you will be charged a higher insurance fee, which is like crazy. So why should I be penalized because I use like a Hotmail email address? It's just not how things should be working. Or because, I mean, sure, you can explain it, like people with a Hotmail address have like lower paying jobs, and have longer ways to drive to the work, and those have a higher weight of probability of having an accident. Or here, if you, for example, this one here is also quite interesting. So using the phone battery life. If you happen to use your phone longer than expected, either because you are like more environmentally unconscious, or because you don't have the money to buy a new smartphone, they penalize you because they think that you are like a poorer client and that you should be charged more. And there are examples here where you say, for example, this one here, it says finance. If you're not able to spell properly, then you are paying more for your loan. And of course, who are the people who are not spelling properly? Is those who are like coming recently to the country, or who have it like as a second, or not like a native language, and then you are paying more because you're not it's not your native language. Or the same here, like if you look at it like time of day making online purchases, like people who came back late and then only make it at like at 11 or midnight, and then they sanction you, they make you pay more because you weren't able to do it in the afternoon. So there are many aspects which are really which are probably improving the I would say, which are improving the likelihood that to have a low default rates, but it's probably not the way that it's not the most ethical way of dealing with your clients. Let me know if you have any comments on this. Like, what are like the data points you think are justified to use in this instance. Well, let me jump to the next one. So this is a Nigerian fintech, and I think it's and what they offer is they offer a analysis, a credit scoring as a service. So they say, well, we have our own model or our own prediction models, and then we can say, like, how likely are the people to repay their loans? And these are the points they're looking at. So these are data points they want to have for the analysis. And I mean, of course, if you know that many, about your clients, are they, for example, what is the gambling rate? What is their, how much, what are they using the money for? What is their salary frequency? But also here they have something like a, where was it? The it was in here, the transaction category. So they also look if you're giving money to your church. But we don't know if giving money to a church increases your likelihood of getting a credit or not. So it's just like it's a black box. And this is something what is like a bit worrisome in this aspect. And of course, if you have that many, if you're like very, if the bank knows everything about your private life and where you everything about what you do in your free time, it's surely something where you can take better predictions here. Okay, let's move on. Talking about the complexities and what are the flows we are seeing. One of the difficulties we see in this inclusive finance area is that we are giving money to impact or social enterprises, and they have all kind of different payment systems. So, for example, you have it here as like one case is where the beneficiaries pay for the services themselves. And in this case, it's quite straightforward. So you, the social enterprises produces some kind of goods or services and sells this to the client. For example, if you do all kind of consumer goods, if you do recycling services, it's like you sell something and you get money. Another aspect what we see quite often is, yes, you deliver the services, but the public authorities are paying for the for what you're offering. And in this case, you have like data flows to the public authorities. And something what I also find often surprising is that many financial institutions outside of the inclusive finance area don't really understand how it works. So you have the public authorities as your client with a very high credit worthiness, but still it's quite tricky to get to set up something in this area. And another example what I like a lot is Wix. So this is a Rotterdam. This is implemented in Rotterdam, and what you do is, if you are selling services to the city of Rotterdam, you are asked to participate in project where you where you fund local initiatives. So you need to buy Wix points, and then these Wix points, you can use them to fulfill your CSR obligations. And what you've set up here is that they say, well, we have this Fintech platform where we are saying, well, we have the organizations, and the organizations are providing services, and then you can buy the services from these organizations, and then you get a point. So, for example, in this case, I don't know, like an energy transition workshop, and then you say, getting people ready for the energy transition, and then you can pay for the training of these individuals. Or if you what kind of career coaches and so on and so forth, which is quite interesting. So you say, well, like this, like the most basic form is that you have a product, and then you're selling the product, and then you have some kind of financial flows, which is governing these flows. And then the third flow, the third aspect is that you have the foundations or general public, which is paying for your services. And of course, if you think about it, like if you, I mean, you all have experiences in this area, like how inefficient many of these flows are, and how long it takes to get paid, how complicated the reporting is. It's like a large a green field where you can really set up like a lot of services, and people would love it because there's really not a lot in this area. Another aspect here is if we think about layers, and fintech is also something about thinking about layers. What are different layers of the financial industry, of the microfinance industry? What you can put on top of each other. And I think what I especially love about our field is also the complexity sometimes of when you look at it. So, for example, you look at the capital structure. Even there, you have like a lot of different combinations. Who is giving your company or the companies or the enterprises money, and then you have like social investors, you have guarantee schemes, you have mainstream investors, you have foundations who all have very different expectations. And then this was a paper where they tried to map. I mean, there are many of those mapping studies where they say like, what are the preferences of or the expectations of the people who are giving me money, and then you can map them along the 3 lines, and then you have those who have an environmental focus, those who have like a social, more of a social focus, and then those who have like an economic profit. And usually you cannot maximize all 3, but then you need to say like what is most important to myself. And then you need to find where you can put your money. And also quite interesting, there are not too many examples where you can where people are offered smart solutions where they can put the money according to their preferences. Because we don't, for example, I don't really know, like people don't really know how you can measure the impact or the environmental impact across industries. I think that's like issues we need to solve first. Like, how can you measure impact consistently across different fields? Then we have people who are supporting the with grants, and then something what is also quite interesting in terms of like financial technology are those the revenue structure outcome contracts. So at the beginning we had this example where we had like this protocol where you pay according to the impact you achieve, which is like the structure of a social impact bond. We also have examples where you make revenue commitments, where you say, well, if you achieve, I don't know, this carbon capture technology, I am paying for the services you provide. And then people know that they can work on these aspects. And there's Frontier, such an example. It's an advanced market commitment, where a few big Silicon Valley companies agreed to put together $900 million to purchase carbon capture units. And then he said, if you achieve that, I pay for your services. And this is something what we can envision for many other fields. So if you say, I pay I don't really care how you achieve it, but if you achieve something in a new way, I'm willing. I don't know, if you say you work in integration, in education, in biodiversity, and then you happen to have like a radically new approach, I'm happy to pay for these services. And what you do is you make a commitment of paying in the future, what you can put into some kind of fund or guarantee, and then you provide these to the industry. So the same here. So they say they are buying removal of CO2s at a certain dollar per ton level, and then they are providing it to the buyers. So it's like a market clearing, if you want, where you offer this. Any comments, any questions? Or we can, we have like 15 slides left, and then maybe we do that, and then we go into the question Q&A session. Okay. If we say, why do we need some kind of new impact data analytics or new ways how we can look at it? I can show you my favorite example. It's the SDG indicator 911. And the SDG indicator 911 says we want to have everyone on the Earth living within 2 kilometers of an all-season world. So that's something what we want to achieve as an SDG. And how it's currently done is that people look at satellite data, people make surveys, people ask, people go out there and ask, researchers go out in the field and ask if people are living close to this, to an all-season world. So you have a lot of household surveys and models and consultations. But I mean, obviously, if you look at satellite data, you can already do that automatically. And for example, I show you here is if you so what you can do perfectly fine even today is that you can measure how many cars are parked on a certain supermarket on a given day. So if you want to analyze the potential revenues, and then you say like each car brings this numbers of revenues, you can say like you just measure the numbers of cars on the parking lot on a given day. And you can do the same with informal housing. So for example here, you can you use the satellite data, and then you can you just measure, you count the numbers of informal houses in this area, and then you can calculate. Of course, you don't know, but you need to model it, and then you can estimate how many people are living in this informal community, and then you can set up your models, and then you don't need to go out there and use service. You can just use satellite data to use to measure how we are progressing on the SDG levels. which is quite impressive if you think about it. Like that you can use satellite data to measure something like how many people are living close to an all-season road, which is quite nice. Or same here, so that you have like all kind of poverty maps where you use machine learning tools to neural networks to analyze how a poverty map from, in this case, Nigeria would look like, and then you would know like where should we put more resources, where should we focus our activities. This is how a neural network looks like. It's actually it's fun. It's fun to calculate like the smaller ones, where you say you have like an input layer, in this case an output layer, and hidden layers, and then you what you do is like you have millions, or in the newer one like trillions of parameters, and then you fine tune each one of them to get your output you wish for. The mechanics are quite simple. It's just that they are very large, and you need a lot of data and a lot of computing power to get to the research. And then let's go to the challenges. And I think that's also a good point to come to an end here. Like, what are the challenges we're seeing? And if you ever go to your smartphone and then just go to your photo gallery and type something in, like a cow, so in this case a cow, it's quite surprising that they identify across like 10,000 of pictures the 10 cows in the gallery, and you wouldn't be able to code it. You just need some kind of neural network to get there. There were just like a few miss classifications, but still quite impressive. The thing is that there are also like many problematic cases, and for in this example, if you're looking for gorilla in your gallery, they are saying it's unable to find it, because the problem was that at the beginning, what they said is like when people were looking for gorillas, they were identifying black persons as gorillas, and obviously that's something that shouldn't happen. And because you couldn't fix it, they were just saying that it's a feature they are not able to give to their clients. And the same here. So, for example, we have all kind of models and algorithms where people who are poor, who have another skin color, are penalized compared to other populations. And if you look, for example, at the bank loans, so there are many, I don't know, like hundreds of studies where people have found that people in certain communities are excluded from access to loans because their neighbors are poor, and for this reason they are also like just classified as not being creditworthy, because the community is not creditworthy per se, and this has an impact on the individuals. Or even if you look at like court judgments, or even something as predictive policing, so that people always never go to the richer neighborhoods, but only to those who are like disadvantaged, and because they go more often there, they will find more crimes as well. So it's like a reinforcing cycle we are seeing here. And also, like if you look at other cases, how you assess teachers, there are many cases where you have seen that doesn't really work as we have wished. Also, something what we see is that if you look at the biases in the models, So this is like Hungarian. Hungarian has like they have the same pronoun for he and she. So you don't really know if it's a female or a male person, but the model, the translation says that those who are like he is a manager, he is clever, he is an engineer, but she takes care of the kid. She is beautiful and she cleans the house. And the same in I guess this is Malay. The same here is the only difference is in this case she's smart as well, but usually you see this gender affirmation here. And maybe just as a closing thought here is, if you look at how you can collect additional data, so for example, looking at surveys, but also crowdsourced data, alternative data, drones, marine images, sensor data, statistical data, and so on, and sharing data with the other organizations. So that were quick 62 slides. I hope it wasn't too long, but too was worth your time.
Thank you very much, Wolfgang. I would like to open the floor to questions you might have around this really complex and interesting topic. I have a question for you, Wolfgang.
Yeah.
When you were talking about credit scoring systems, not so long ago, it was really difficult for microfinance institutes to get access to credit scores, like Schufa, for example. And in some countries it has been easier, in some countries it has been more difficult. It's still difficult. And I think it's fair to say that is still the case. Microfinance in itself is still very much a relationship-based business. And quite often this argument is used to distinguish between banks and non-banks institutions. And what is your prediction here? Will that change when technology or data becomes more affordable? You mentioned that some data is really rather expensive.
I guess Matteo from Microfinance also has a good view on these topics. But what has really changed in the last 10 years is or maybe the last 5 years is using your own models is extremely cheap. So it doesn't even cost, like, you can sell it for 50 euros. You can have your own model. It's not that expensive. So just keeping it running and and getting your data is like the complex topic. So I think the models are cheap. Of course, you need someone who sets up for you. That's another topic. But just the commuting power and using your own data, I think that's something what is feasible. What I also believe is that that microfinance institutions, they have already a lot of data, and just using like what they already have, and then using statistical data. So, for example, if you look at your historical data and then say, well, how has the GDP growth or housing prices or whatever has impacted my repayments or my default rates, I think that's already quite useful. So I think this is something what can be covered here. but then again, like I would say microfinance institutions are like among the most ethical institutions, and you should always be like have the interest of your clients at heart, and then it's saying, well, you penalize those who are living in a poor neighborhood because they're living in a poor neighborhood. That's not how things should be done. How banks do it. So if you have like a poor postal code, you don't get the credit. But why should this be the case? Because you look at the individual, you look at the potential, and then you would give them. You wouldn't say like because you have an old smartphone, you're not getting the credit. It would be like stupid to do and counter to your mission. Matteo, any views on this?
No, first of all, hi everyone, and thanks a lot to you and also to York for all these workshops and comments. No, I just wanted to say that I think it's probably one of the most interesting issue nowadays. All these let's say data treatment and data science issue and industry. Unfortunately, the perception that I have is that in the majority of the cases, we would like to have more data available for all the analysis that we are supposed to do, and in many cases, also I would say also the biggest entities, microfinance, but also financial institutions, entities do not provide too many data, so it's not easy to treat them properly. No, so I think that in general terms. All these are.
We're losing you, Matteo.
Okay, I don't know if you can hear me, no? Yeah.
No, we can hear you.
Oh, okay. No, yeah, I was just saying, just to conclude that if we want to really implement all these new technologies, artificial intelligence, blockchains, and everything, new technologies, also to our sector, it would be necessary also to have from the supply side the right approach and the availability, no, of the data. Otherwise, it's the impact of all this kind of analysis would be so much less important, let's say.
Yeah. Raphael.
Well, me, Wolfgang, I find this very far ahead, very far ahead to the major issues we have to solve. I would say that what strikes me is that so far, the credit scoring models I knew were much more based on quantitative data, quantitative information. And when it comes to microfinance, I think the qualitative aspects of each case are much more relevant. Here in Portugal, what has been said about the more than 10 years experience of the microcredit program is that one of the flaws, one of the drawbacks is the not enough non-financial services quality are available to promoters. And if we think that most of the microcredit promoters coming from social excluded environments are unemployed, long-term or not unemployed, come from different. That is why it's so critical the non-financial services, meaning the mentoring, the coaching, which means that the personal relationship between the service provider or the financier and, of course, also the person in question. Well, leads me to the issue of qualitative data. And I wonder, getting to the point, how can we, in automated credit scoring models, use the balance between quantitative data and qualitative data? And from our experience, it is so that we have we are very much involved in the non-financial services issues, and where the components like mentoring and coaching are so relevant. How could you use this in these automated solutions? Thank you.
Yeah, ahead of the workshop, I was reading through the regulation, and I don't know the microfinance regulation in all the countries, but my understanding is that you have more flexibility than the banks in setting up your credit scoring model. So if you're a bank, you have like your risk departments, and they say like there's no, you have your logistic regression models, and there's no way how you can deviate from these models. If you, as a microfinance institution, and I'm sure there are exceptions, but you have more flexibility and a lighter regulation, and then you can set up your own credit scoring models. And there's a way, I would say, is you can always, so for example, in some cases, as the loan officer can give like additional points, so that you can make like the quantitative data, and this is like the hard data, like the income, the age, the family status, whatsoever, what you put into your model. And then you can always say like, what is the impression of the credit officer? And then the credit officer can say like 20, 10, 30% of the assessment is driven by the loan officer, or by the person, by the relationship manager. And then he can say what is his or her impression of the credit, of the potential lender. But yes, I agree. Like also what Matteo said before is, I'm also often wondering like why organizations are not sharing more of the data, because they have it, and then just trying to set up like a data cooperative would be nice. I mean, obviously you need to put it like anonymous data and have some kind of reciprocal relationship that you also get other data back. But I think this could be quite powerful. And the other question, Jörg, at the beginning is, what I also believe is that you have so many assets out there, so many interesting ethical assets or inclusive finance assets. What you can say like, what is the next potential step for microfinance in this area? So, for example, like you fund students, you fund the give them a loan for the university, and then you have some kind of revenue share agreements. You do like very specific insurance schemes. You do very specific bridge financing for public funding. You do when people have a guarantee, you can capitalize on it. So I think there are many potential ways how you can take existing assets and use them, put them to a better use.
As you were mentioning, the ethical use of data. So over the weekend and today, I checked some newspapers, and I find it quite interesting how the conversation, for example, around large language models changes. So at the moment, the hot topic is regulation. Should we regulate or shouldn't we? Should we wait and see what comes out of it? What's your take on that?
I don't believe that the chatbot will kill us. So many people say that the chatbot will kill the civilization. So I don't really believe in this. And I think like the hype will. I think that the current models are phenomenal. I also use them a lot. But what people say is that we probably see a plateau of the current architecture of the transformer models, and then people need a new architecture for the underlying data and for the analysis. So it's something what we can expect. So like a new AI winter, so what we had in the past. So people were always excited, and then there was like a stop of the developments, and then it took like 5 or 6 years until something new came, and then we had it like 4 times before. So we had like in the 50s, like the first AI developments, in the 70s, in the 90s, in 2000. So so I think that's like something what we will see more regularly. In general, I think there are like many open topics. So, for example, all these issues around labor market. I think this would be like a huge displacement of jobs. What we as a society should also manage somehow. And if you look at all these data entry jobs, graphic designers, also like research assistants or even legal work, I think many of this is just like will be automated, and I think those jobs are gone soon. And this is something what we should, as a society, somehow manage, and just I mean, we benefit, and then we need to pay for those who are bearing the cost of this. But in general, I think even if you look at the generative models, you can also use it in microfinance a lot. So like giving advice to customers, giving them advice how they can apply, giving them advice on financial literacy. I think that's perfectly fine. But I wouldn't say I'm not too negative on these on the issues. But yes, if you look at all the like misinformation, fakes, so it's really biases, like what kind of worldview these models replicate. I think that's not that's not something what we really want, but it's something what is happening.
Just to ask a really difficult question. You mentioned graphic designers, for example, and I mean, at the moment, I guess we all see a lot of AI-generated content. I've been following that for quite some time, and there's this argument made by artists that and you can easily recognize a certain way, and you can backtrace that to a group of artists or different schools. So there seems to be some, how should I say, some legal issues, like whose idea was it? So basically, it's a copy, and if there is no fresh input, then also the quality of the design goes down significantly fast, surprisingly fast, actually. What's your take on that? Is this going? I mean, artists, the graphic designers, it's a significant target group or target audience for the microfinance sector. Do you think this will be resolved, or is this not solvable?
I always like to take the lawyers as an example. Like nowadays, you never take a lawyer because they're too expensive. But if you say a lawyer happens to be like 10 or 20 times cheaper than today, I would even give them like please check the invoice. You never give them an invoice, because why should you? But if it would be that cheap, and they have like a very efficient way to produce the documents, I would say, can you please the terms of and conditions? Can you please check the contract? Can you please check this and that? I think that's something what people would do a lot more. And I think the same with graphic designers. Like what happens is that their marginal cost of production is decreasing, and they can produce more. So the question is like if your services cost like 10% of what they cost before, because you're much more efficient, then it would be the same as before. And this could happen. So like people think that the graphic designer is still better in doing a flyer than a model, but I think that's something what what could happen. But we never know. And then usually what happened in the past is that each new wave of technological progress improved the society overall. So, for example, if you looked at like machinery in agriculture, you've lost a lot of jobs in the agriculture industry, but overall people were better off not working in the fields than they were like 100 years before. So I think those are like all things, but the transition and the adaptation is painful and probably also expensive to manage. It will take you a while.
Thank you. Are there any more questions? It does not seem to be the case. As always, the invitation, if you have want to question, ask Wolfgang a question directly, we will stay here for a minute. And I would hope that we see each other again on the 14th of December, same time. Thank you for joining us today. And if we don't see each other this year again, enjoy the festive season and have a good start into 2024.
Okay, thank you.
And again, thank you, Wolfgang. And again, if you want to ask Wolfgang a question directly, wait until most have left, and then we will have a few minutes to talk.
Thank you. Bye-bye.
Bye.
Bye, Matteo.
Jörg, you know a question to the answer from Christos?
Oh, I haven't seen that.
On the, I know the mix market was quite cool.
Yeah.
In the past, and I also used it a lot, but I haven't seen the data either. So
yeah, I'm afraid this is going to be no, it's not something I know.
I can look it up, but I'm not aware that that there's anything either.
The EMN is surfacing some data in an annual report. But again, it's only a very small segment we actually cover. Mostly because some organizations, like certain banks, for example, don't participate, even on invitation and direct contact. They just don't provide this data. So
Yeah.
the
No,
quality of data is biased.
For the preparation, I was also looking at what the investment banks have for microfinance, and there's really nothing, or like very few research reports.
Yeah. And I mean, in certain countries, we have a dominance of banks in the sector, like Spain, Germany, to name a few. And this data is just not accessible.
Yeah.
Probably those who provide the guarantees, like European Investment Fund, probably have data, but I'm not sure that they're going to share that.
I'm very limited. Sorry, Christos, for not having it better. So I think that's it for today, right?
Sorry?
I think that's let's call it a day.
I would agree. If there are not any other questions, thank you very much for joining. And as I said, hope to see you soon.
And can you stay online for a minute, Jörg?
Yeah.
I will just remove the others.